Time for a stock review. This time, VALE, ticker symbol VALE. If you're one of my members of my channel, you can also ask for a review where we look over the numbers, we write on the chalkboard, and we try to work out, is this an opportunity? Can we make money? Can we turn the printer on? So we're going to go over all the numbers, we're going to discuss it and debate it, and we're going to look at everything we need to know to make an informed decision of whether we can invest wisely with VALE. Now, during this review, we're going to look at many aspects of the stock. We're going to look at a brief look at the chart. We're going to look at the back test against the S&P 500. The dividend, it pays out a dividend. So does it pay out regularly? No point promising if it doesn't deliver. We've got some AI software here to present us with a roundup of the stock at the end. We're going to look at the valuations, the latest news, the latest prices, the declaration of the dividend. And so on and so forth, and some latest news. All right, plus we're going to make it quite visual. I'm going to give you a visual experience as well using all my software. All of you will be able to get this software. Members, you can get it in the live chat. There it is, Seeking Alpha and Alpha Spread. We're going to show you the intrinsic value, the valuations, who's buying, who's selling, the balance sheet, all of these things. If you're watching later, this is being made during a live show. You can get all the links of all my software below in the chat, in the description of this video. Right, let's start from the beginning. Now, if you like reviews like this, you can get a review if you are a member of my channel. Tap the like button, become a subscriber, and I'll gladly do the same thing for you. There you go. All right, let's look at VALE. Well, as you can see, I'll point out straight away, ADR. This is a depository, American depository. So you can invest in a company from another country on the US stock market, but there'll be a very, very, very small fee, less than 0.1 cent when you sell your shares. Not a big deal, but they have to declare that. That's what the ADR stands for at the top of the screen. Now, you can see straight away it's a trading stock, but it does pay a dividend. So it's not going to have massive growth because the dividend is massive. But is it always paying out? Is it always increasing? Plus, you do have a growth, 334% over the last few years. Well, how many years is it? It's all the way back here to 2020. What was that? 2002. So 23 years, you've gained 334%. And well, every 7 years, you gain, you double the S&P or thereabouts. So has it outperformed the S&P? Well, we're going to compare that in a minute, and you can decide for yourself with the dividends being reinvested. So you might not have the massive growth, but you have the dividends. We'll talk about that in a moment. What is the company? Well, VALE engages in the production and exploration of iron ore, pellets, manganese, iron alloys. It operates with the following segments: iron solutions, any transition materials, coals, and others. The iron solution segment includes the production and extraction of iron ore, pellets, manganese, and other ferrous products, and logistics services. The energy transition materials segment involves the production and extraction of nickel and its byproducts. The coal segment consists of production and extraction of metallurgical, I hope I pronounced that correctly, and thermal coal and its logistics services. Others include the revenues and costs of other product services, research and development, investment in joint ventures, and associates of other businesses. The company was founded in June the 1st, 1942, and is headquartered in Rio de Janeiro, Brazil. The listed name is VALE SA. Okay. Wonderful stuff. So we understand a basic concept of what this business is about. Now, the CEO is Gustavo Duarte Pimenta. If you'd like Gustavo on the show, we do have a Meet the CEO series when you can invite the CEO onto the show to learn more about the company. How that's done is you go onto investor relations and on their website, email them, tell them you're an investor and you'd like to hear from them and build a relationship with them, tell them that you own the stock and invite them to be on the show. And after a while, you'll build a relationship and we'll have them on the show. That's how it works. So 1942, he's been around for a long time. We like that. Headquartered in Rio de Janeiro. We've got no problem with that. Volume 23.1 million, very low volume, right? So you might not get you don't have the liquidity there to trade the way you might like to, but it's got very, very low volume. That's today's volume. The average volume is 31 million, so it's very low volume. Market cap 42 billion, I beg your pardon. 52-week high 13.14, 52-week low 8.38. The PE ratio is 6 times earnings. That's very nice indeed at the moment. 6.74. That is good. A good PE ratio. We'll have a look in a minute and we'll see. In fact, I'll do it straight away so I can compare it. What's the forward PE? So is it improving? Oh yes, the forward PE is 4 times earnings. I'll just show you where I'm getting that from. That's nice. That's nice. It's actually improving in valuation. The forward PE for its guidance makes it even cheaper for where it's going, 4.43. So far, we like that. That's good so far. They've obviously got good numbers, good guidance. So at this price, it's even better with its forward-looking numbers than its backward-lagging numbers. So that's good. We like that. Okay, so far, we're good. Now, 9.94% dividend. Now, that's only great if you're going to get paid out regularly. Is it monthly, quarterly, daily, weekly? I don't know. We'll find out in a minute. And it's only good if it consistently pays it out and hopefully increases. But we have had growth over the period as well. But again, how will it compare to the S&P? Well, we'll compare that in a moment. Seeking Alpha say it's a buy and a hold. No one selling. That's good. Not Seeking Alpha, I beg your pardon. Morningstar. I don't take their word for it. They're paid to review the stocks. I do it for free, but it's a nice start. Bulls say Vale could benefit from efforts to decarbonize steel making. Steel makers prefer high-grade inputs such as Vale. Such as Vale's iron ore, as they require less metallurgical coal and result in lower carbon emissions per metric ton of steel produced. That's what the bulls say. What do the bears say on the stock? They say Vale's investments in non-ferrous business lines such as coal, nickel, and copper have been pro-cyclical and expensive, destroying value. Returns have been poor and have weighed down overall group returns. Okay. Let's scrolling on down. Economic moat, none. That means their margins are low. We'll come on to that in a moment. Fair value, $14. And we are currently trading at, I just remind myself, what was it? 9.30. So it could suggest it's undervalued, but we'll decide that ourselves, certainly. Uncertainty, high. Stewardship, poor. They don't like the management. Okay. What about the earnings? A miss, a beat, a miss, a bit all over the place. The analysis tends to be from Wall Street, kind of pretty reliable. Kind of where the stock is going, but it's been surprising the markets a little bit. Hence the volatility. It's not been delivering up to us. It's not a stable asset, this one. Obviously, you can see it from the earnings. Okay, the next earnings is April the 23rd. If someone requests the earnings, one of our members will cover the earnings for you. Now, who else owns this stock? Now, this is good to see. Did not want to see a Lucid or a Mullen off the bat. That would just tell me this is a trading stock, but it's also volatile and scalped and just all over the place. It's owned by some very nice companies. Petrobras, we've covered Petrobras. Rio Tinto, we've covered them. Good. I don't know anything about energy transfer. BHP, I haven't done that one. Pfizer, solid. AT, solid. Ford, well, it is rubbish, really. Doesn't do anything. AGNC investment. Verizon, Barrick Gold, and Rhythm Capital, Enterprise Products. Right, so far, what up Walgreens, Intel, okay. So what up Realty Income, solid. So what I'm seeing here is good. It has good company. Now that's important because it tells us how it will trade and who owns the stock and what people are likely to do with it. Have we got any inside information here showing for the stock? No, nothing there. Okay, we're done with this part of the software. We'll move on to much more advanced software now. So please tap the like button if you like this and consider subscribing if you enjoy my reviews. All right, let's go and show you now some more detail and some news around the stock, and then we'll go on to the visual element of it as well. So if we go and look at the forward PE, it's 4.43, so improving. I like that. Short interest, none. No measurable short interest. That's good. That means people don't think see an opportunity here to drive the price down, or it's going to go down. So that's kind of good. Seeking Alpha analysts, they say hold. Well, they self-interest. Don't take that one. Wall Street, buy. Quant, hold, the AI software from Seeking Alpha. Now, if you like Seeking Alpha, Alpha Spread, this is my Seeking Alpha Pro. I highly recommend it. I use it all the time. I pay to bring you this pro service, which you can get free trials and discounts for. I strongly recommend you get it. So there you go. Without my referral, you won't get a free trial or a discount. If we scroll on down, evaluation A+, and possibly improved since then as well. Growth D-, it's about the same. It's improved since 6 months ago though. Profitability A+. Momentum up from D, and revision C+. Factor grades looking quite promising. All right, we like what we see there. Let's move on now to, this is on Monday. Well, today it's Tuesday, the 11th of March. On Monday, ex-dividend date. We'll come on to the dividends in a moment. Has declared a 37 cents a share quarterly dividend, payable March 21st for shareholders of record of March 10th. Like I say, yesterday at the making of this video, it's March 11th at 1:05 Central Time. That's why I put the clock on the screen, so you can see what I was doing when I was doing it, and so on and so forth. All right, but we'll come on to the dividend in a moment. Now, this was out March 3rd. This is just a week ago. Vale continues losses for 7 straight sessions. Let's have a little look in here. Vale shared continued losses for 7 straight sessions as the stock closed 0.42 lower at 9.39 on Monday. The company lost about 6.73% in the preceding 6 sessions. Vale is up 2.74 over the past month. The stock closed 2.08% lower at 9.43 on Monday. On Friday. I beg your pardon. Looking at Seeking Alpha's quant rating, Vale has a hold with a score of 3.7 out of 5. The company received A+ in the prospect of valuation and profitability, while it got a D in growth. Okay. However, Wall Street and Seeking Alpha are bullish and rated the stock a buy. Seeking Alpha analyst Bernard Zambonin noted Vale generated $8.85 billion in the last 12 months in net income, $10.4 billion in cash from operations, and slightly less under leveraged free cash flow, standing at $8.12 billion. Vale's cash flow outpaces net income, showing the company has strong liquidity to weather economic fluctuations while sustaining dividends, added Zambonin. Vale's Q4 $694 million net loss swung from a $2.94 billion profit in the year earlier quarter and a $1.95 billion profit expected by analysts in a LSEG poll, hit by $1.4 billion in impairments on its Thompson nickel operations and $540 million on a project to expand its Voisey's Bay mine. Excluding the impairments and one-offs, Vale's Q4 net profit would have totaled $872 million, still down 64% year-on-year, due largely to lower iron ore prices and sale volumes. These particular stocks are secular. They go up and down. If you followed Rio Tinto, you can see people buy when it's down and they store their commodities. The futures come on here. People go, okay, I'm going to buy a certain price to protect the inflation and the unpredictability of commodity markets. So it's a secular stock. So like Rio Tinto, you buy on the dip and you might sell or whatever, but you always buy on the dips. It's dipping a little bit now. If we go back to the position again, you can see it's in its lower trend. It's not the bottom, but it's certainly dipping right now. And now, of course, it's ex-dividend anyway. All right, let's carry on with our review. We haven't got on to the main part yet. Let me scroll that down. Let me read this bit of news, and then we're going to come on to how it compares against the S&P 500, its dividend history, and then its balance sheet and everything else. Vale signals 2025 capex reduction to 5.9 billion, announces 2 billion dividend amid cost optimization. The management view from the CEO, Gustavo Pimenta, emphasized the completion of key projects, including the Vargem Grande and Capanema startups, which add 30 million tons of low-cost production capacity. He highlighted progress with strategic partnerships such as Minas Rio acquisition and construction inflation of the SOA concentration plant in Oman, set to commence operations in 2027. Now then, what we're going to do now is look at the first thing is we're going to do the dividend. People buy this stock also for the dividend, of course. So we know it's quarterly. What we're looking for is regular payouts and increasing if it wants to qualify as a dividend king. Let's have a look. 56, this is back in 2012. 32, 25, 7, 35, 4, 37, 40. So obviously we can see it secular. It goes up and down with the price of the commodities, all right? But so far it's paying out consistently, all right? But you can see it swings from the 30s down to the 7s and the 4s, back up 28, 12, 15, 4, 31, 26, 25, 17, 60, 50. So you can already see 150, 72, 39, 29, 5, 34, 38. So what you can see consistently pays out, and it does swing up and down. But overall, I would say it's trending up. It's secular pattern. So that's what you'd expect from this stock. Most importantly is it's paying out regularly. And this 8 used to be the old 5. So it's increasing. So you've got growth and dividend payout. But how does that compare to the S&P? Because at the end of the day, you've got to compare it. So here's a back test. Now, the S&P, in 2016, this is as far back as we can go with this particular comparison. In 2016, if you put $10,000 in Vale, you've now got 51. And that's including paying in the dividends automatically. Not on the dips, not manually. You could have improved on this. This is just paying in every quarter. Okay, 51 grand, 5x since 2016. On the S&P 500, a 3x. So it's outperformed the S&P, including paying in the dividends. All right. Okay. Now, as you can see, over the time, the S&P looks pretty calm, doesn't it? Pretty flat. And if you look here in 2020, when COVID, it hardly moved at all compared to Vale. So a lot more volatility, but so far I have to say I like it. If you can buy it on the dips, why not? If you can invest the dividends on the dips, why not? This looks good to me. So far I can see this is very, very interesting. Since 2016 to 2025, which is not a long time, but it has outperformed the S&P. And because of the volatility, if you buy here and invest your dividends here and just basically keep adding and with the dividends on these periods here, it's a pretty predictable pattern. Every few months or every year, every 6 months to a year. So that looks quite good, right? We're liking that. All right, we're liking that so far. Now then, I'm going to show you some visual, and then I'm going to round up the stock. So we're going to go now to the visual representation of the stock and have a look at the balance sheet and see how it all pans out. So now then, I have to point out that this is in Brazilian currency. So we are talking Brazilian money right now. So when we talk about this stock, we're talking Brazilian money. So just bear that in mind. The percentages will be the same, but just remember we are talking Brazilian money. All right, that does make a difference. Okay, so let's have a look at this one now. We've got base case scenario, we're 23% undervalued. Best case, we're 42%. Worst case, we're 3% overvalued. So good time to buy. I think we all agree. So far, I'm liking it. Again, that's not $69. That's 69 Brazilian. Okay, different, but gives you an idea of the fact it's undervalued. Okay, let's scroll down and see what we got here. Financials, 206 billion, down 2%. Now, this is a company that just pretty much steady business. Anything like this is steady business. You can see in 21, it did rally after COVID. You can see it did pick up and then go back. I guess that was to get supply back out again. Maybe we're running out of these commodities and there was a big rush to get them back out, and then we're back to normal. And as you can see, we end up on the same curve. Kind of makes sense. If you think about it, if the world needs so much iron or whatever it might be, it's not suddenly going to want more. It's just going to, we sell a lot because we didn't do much for ages and now we go back to normal. But that growth, you could draw a line straight through that and you'd come straight out this other side, wouldn't you? See what I mean? Steady. It's a nice steady business, right? Operating income, again, you see the COVID situation there, right? Net income down 35% on the recent term because you can see it's secular. Down it goes and then starts to climb again. Free cash flow down 39% on the recent range. Operating cash flow down 11%. Again, you can see how it's secular. EPS down 35%. Assets. Now then, this is a balance sheet. 496 billion in assets, 289 in liabilities. It has 31 billion in cash. That's a good percentage. We don't like companies that are just all cash, right? Have some cash, but not too much. That's a good percentage. In fact, the cash makes up 6% of its balance sheet. I can live with that. That's nice. They've got some cash, but not ridiculous amounts. But what we don't want now is the liabilities. It's a little bit tight between the liabilities and assets, but okay, if it's workable assets, but we don't want workable liabilities, but I don't want to see loads of debt. Let's have a look. Long-term debt, 88 billion. Okay, what is that percentage-wise? Long-term debt, 30%. Little bit high on the debt. No doubt about it. 30% if your liabilities are debt, but rates coming down, they are going to come down. Up for longer, but they are going to come down. That's a catalyst. If we'd have had 60% debt, I would have been, don't like that. But 30% debt, I don't think with the rates coming down, that's manageable. Okay, let's have a look. What about its margins, how it makes its money? 36% gross margin, 28% operating margin, but it ends up with 15% net margin. Now then, earlier on, when we gave you the review, this is why you've got to do all these different things, what I'm doing now. If we went down here, according to Morningstar, they've got no moat. Economic moat, none. Not true, is it? It's not true. What do you mean there's no moat? There's 15% of moat. What that means is they are able to reduce prices and stay in business, okay? They've got some margin, right? Admittedly, that might not be much compared to the industry. Now then, how do you compare to the industry? Well, if you want to know what other companies are doing in the same sector, if you scroll down here, there's a comparison chart somewhere. I won't go into it now, but if you use this software, this is my alpha spread, you can see what other companies are doing in the same sector. And that way you can compare. So you can go, for example, Rio Tinto. Shall we do it for a moment, just for the sake of it? In fact, I won't do it. Yes, I will. Yes, I will. Just for a moment. Rio, 15% of your margin. If we go Rio Tinto, similar business, Australian business, Rio Tinto, and we go down here. This is one of our favourites, Rio Tinto, and you go to the net margin. There you go. 21%. Now that's what is meant by no moat. It should be narrow moat, not no moat. So this is the leader, Rio Tinto, one of our favourites. 21% net margin. So it can put pressure on this stock because it's only got 15% margin. You get the idea? So, and also it's lower than its competitor. Make sense? Okay. Makes sense, right? I think so anyway. Right. Are we back on the right stock? Yes, we are. Vale. Okay. I just came back and want to make sure I'm on the right stock. All right. So there hopefully explains your net margin. FCF margin, 7.3%. Now, if you want to know what the terms are, I'm not going to go into every term. I'm assuming you know, but if you don't know, again, my software will highlight it and you can understand what all these margins mean and you can learn more about it. 14.5% ROCE, ROIC 12.2%, ROA 6.6%, ROE 15.9%. Profitability 62%. See, it's not a no moat at all. That software, Morningstar, was biased. It was a narrow moat if you compare it to Rio Tinto, not a no moat. So there you go. There's a good indication straight away. Profitability is 62%. Well, it wouldn't have been that high if it had been no moat. 49% solvency. Like I said, not the best balance sheet in the world, but it's not going bust anytime short term. Short term, mid term, not going anywhere. Average interest coverage, it's got an amber tick. So when rates come down, it's going to be a nice catalyst to drive it up. Okay, 49%, not too bad. You can invest in this and not worry. All right. Okay, Wall Street, they're saying a 12% upside, a 12% upside for this stock. On the worst case scenario, average is 81% upside. Sorry, beg your pardon. 52% is the average. All right, 52% is the average, and 121% is the best. I would say we're around about here. Again, outperforming the S&P. This is a good buy, I think. I think this is not a bad buy at all. Now then, we'll probably rank number 1 on YouTube for this because no one's talked about it for 5 months. This is all the media, Bloomberg, CNBC, no one's paying attention. So this will rank on YouTube. More people will talk about it. It could have a little bit of bounce, not because of me, but because it gets more attention. People go, oh, a stock outperforming the S&P. I like this. Good dividend, paying it consistently. So what do you think? Well, let's wrap this up with our final AI overall valuation and what makes it unique. If you like this so far, please do tap the like button. Consider subscribing. Thank you very much for being here today. I hope you're enjoying this review. So let's have a little look at our final wrap up of this stock and see what we think. Forward PE 4.43. We know what the company is. We've already talked about it. Competitors, there you go. Look at that. Rio Tinto. That's called experience, folks. I didn't even see this beforehand. I'm making these all live. I don't preset these up. I just get the software ready and read it and understand it. And there you go. But I mentioned Rio Tinto, and there it is. Competitors include Rio Tinto. So that's 4 years of doing this 12 hours a day. I love that. I promise you, I did not see that. So these companies like Vale are involved in the mining and production of iron ore and other essential minerals, making them direct competitors in the global marketplace. Vale's unique value proposition lies in its competitive cost structure and strategic investments in energy transition materials. The company has positioned itself to benefit from rising demand for metals like nickel and copper. Essential for energy transition technologies, Vale's efficient operations, especially in iron ore production, allow it to maintain profitability even during periods of low commodity prices. We talked about that earlier. It's secular, so you buy the dip and you stay in, and this is a good one. I like this. Additionally, Vale's commitment to sustainability and addressing environmental liabilities further enhances its market position. All right, so we talked about this earlier, all our valuations. We'll go into a little bit more detail. Valuation is very attractive. The forward PE is good. Forward ratio of 5.71, significantly below its sector median of 16, indicating a discounted stock price compared to peers. The dividend yield, 8.442, much higher than the sector's 2, offering strong potential income potential. This is a buy for me, 100%. This is exactly the sort of thing I would be buying if I wasn't just here to be impartial. Absolutely. Growth. VALE's growth metrics are concerning. With a forward revenue growth of -2 below the sector's 3, this suggests a declining growth trajectory, which could impact future earnings. Remember, a company doesn't always have to grow. It can just be consistently doing what it needs to do. It doesn't have to always grow. I've got no problem with that. Okay. Let's carry on with our momentum. The stock's momentum is mixed, with a 1-year price performance showing a decline of 27%, underperforming the sector's 3%. However, the recent 3-month performance shows a positive trend, outperforming the sector by 6%. Revisions. Earnings revisions are negative, with 10 downward EPS revisions and only 2 upward in the last 3 months, indicating a cautious outlook from analysts regarding VALE's future performance. In summary, VALE exhibits strong profitability and attractive valuation, but its growth challenges and negative earnings revisions suggest a cautious stance. The stock is rated hold, reflecting these mixed dynamics and indicating it may perform in line with its sector peers. Positives raised by the analysts on Seeking Alpha. I'm not going to read that. They're paid to say that. Concerns raised on analysts on Seeking Alpha. I'm not going to read that. They're paid to say it. All right. About Seeking Alpha. No. I'm not interested in that. Okay, that will do for me. So let me wrap this up today and give you my final thoughts. I am a long-term investor. I do trade on my Roth IRA. I've traded 22 times and I've won 22 times. I'm a long-term investor on my main account, as I wish to pay no tax. I wish to own for the long term and acquire more and more shares over time. That's what I do. That's what I'm all about, and so on. I like buying quality businesses I can own and forget forever. That's important to me. And I like businesses that produce things that we always will need. Solid, not sexy, rock and roll, good businesses. If you've got a dividend paying stock and it's got a growth, you've got the best of both worlds, because you can buy the dip. But you can buy the dip with your own money. If the growth was there and it was a higher growth, it wouldn't really matter too much, would it? I've got lots of the same person subscribing to all my channels now. Interesting. Okay. All right. So there you go. For me, it's a buy. It's a buy because it's a solid business. I like that. I like the dividend, but it has the growth. It's outperformed the S&P. It's in a dip right now. It's in a sector we always use. Its balance sheet is good. I've not seen any inside trading, nothing like that to worry about. The news looks good. Yes, growth is slightly down. Well, we've got a bit of a growth scare in most stocks right now. It's a potential buy from me. Do some more research, but I like it. Click above my head for all the links down below in the description, and you'll also find here in the description the links to Alpha Spread, Seeking Alpha. All my members who are watching, who like my software, can get that. It's in the chat for you now. And you'll also over here see the playlist for VALE. So if I cover the earnings or there's news or anyone wants me to cover more of it, I'll put up here, or down here I put my review, analyst review playlist of all the stocks I've reviewed. I've reviewed, I think, nearly 300 now. So go and check them out. There you go. Become a member and you can have a review just like this. I guarantee this video will trend tomorrow on YouTube and more people will know about VALE. That's not a guess. That's based upon facts. I expect that to happen. Until next time, as always, take care of yourselves and each other.